The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, we kicked off the month of June on Thursday with fairly positive money flow throughout much of the grain and livestock sector. We're going to talk about that. We're going to take a look at how things stand here as we near the end of the holiday shortened week. We're joined now by Bryan Doherty, Senior Market Advisor at Total Farm Marketing, is with us here on the show today. Bryan, always good to catch up with you. I hope you've been having a good holiday shortened week so far. And you know, when there's green on the screen, it's got to be a positive day, right?
Yeah, it's been thank you, Jesse. Yeah, it's been an interesting spring / early summer. We've had a lot of volatility, a lot of big down days. Nice to see some pretty good up days here today. Just a little bit of red on the screen today, and that was in July corn by the close. Probably a function of the trade focusing a little bit more on new crop, maybe reversing some bull spreads, but probably also we had July corn back over $6 again this morning. I'm willing to bet there was some cash sales that were made as well. Farmers recognizing it's June 1st, kind of at a pivot point here in the markets. You take the risk with some old crop, or if you got a good basis, you let some go. I'm willing to bet there was quite a bit of corn sold today in the cash market.
That's a good observation, and it was something I was wondering there as well with July corn, and really, you know, looking at this market overall. First of the month, money flow, 2 days in a row now of decent money flow, but you have to look at that at the backdrop of just all the volatility you mentioned, and a lot of other factors that are out there. Just some of this, it feels like some of this worry about some demand destruction or weakening of demand possibly here, but then again, that's something that we have to just watch closely in the backdrop of a lot of other factors like weather, et cetera, Bryan.
Now, when you look at the totality of the volatility, and you look at where I think the most critical market right now is, and that is December corn is placed, we're right up against some resistance here on the board at the 530, 535 area, and from the perspective of, you know, where does demand come from? Demand comes from those who feel pain and they need to get it bought sooner than later, or just when things are cheap. Corn is cheap. End users could feel some pain pretty quick if this drier weather continues. And this drought monitor map that came out today certainly reflects growing drought concerns. Now, I know the forecasters seem to have aligned themselves with a cooler, wetter forecast, but when you talk to farmers who haven't had rain in 3 weeks or 4 weeks, they need more than a forecast. So you've got some volatility priced back into the market. The other thing is this debt ceiling has been hanging over the market. Looks like that's on the right path. The Dow up today, not dramatically, but up. The dollar down, and that's probably a big key there. So the dollar down kept some interest alive in our commodities, and then of course you have the cattle market, which is scorching hot. Really accelerating into something you see in bull markets I'm not saying it's reaching a top, but often markets will accelerate toward a top or a bottom.
Very true. Well, and you mentioned that dollar. I think that was very key on the day on Thursday, just giving us that chance to run a little bit to the upside. I have to wonder, though, and you mentioned this as well, that we maybe saw a little bit of selling in July corn. I just wonder if a couple of days, up days here, could we possibly see some profit taking in this market? Because the overall trend, it feels like, as of the last couple of weeks, has been down in this grain market pretty much. Corn, beans, wheat across the board. The trend has been down, Bryan. Do you think we are maybe breaking that trend finally or not?
Yeah. So if we go back the last 5 years and kind of look at the money flow, it's been defensive most of the time into this early summer window. When you look at 2019 and 20, we had pandemic issues, but the funds have been pushing this for a long time now. And the one thing that'll push them quickly back the other way is weather. So weather, that's why it gets so critical here. So I don't want to say I'm turning bullish on weather, but I'm respectful of conditions that are less than ideal, that seem to be getting less than ideal this week as forecasted. So future forecasts make a big difference. Our demand has been terrible in corn. Brazil's crop gets bigger, as noted today. FC Stone increased their projection, nearly 2 million metric tons, or in the vicinity. It might even be a little bit more. So about 80 million bushels. And so we're not selling it. We're not seeing less production out of Brazil. Those are big factors. And so to really muster through this resistance, it's probably going to take continued weather. So there's a couple of things I just want to get across here, that if you're an end user and you've watched this market literally decline for a year, corn prices peaked last May, they bottomed this May so far. So they've been in a downtrend for a year. Don't fall asleep at the switch, just assuming the crop's going to be there. I think part of me says the corn crop is one of these crops that, gets a lot of bullets shot at it and seem to dodge them or miss them. And some of these bullets have been really dry conditions the last couple of years out west. And then you get a timely rain or two. So it still takes really timely rain to make good crops. And so we're back to the timely rain from this point onward, where these drier regions are. And if you don't get those timely rains, it will have impact. So end users, be on alert. Those who are producers, kind of look at this carefully here. December corn, if it gets it back in that 550 zone here, the first week of June, right now we're at 530. I want you to think about where we started from last fall. It's about 6.25. So to give up 75 cents on a slow export market, a big Brazilian crop, and more acres this year, you recognize that 550 is probably about a fair price for corn. So if we hit in that 550, 575 area, and that's where the inverted head and shoulders formation points to, recognize that might be all the muster you're going to get out of this rally this year, unless the weather just continues to be adverse.
That is a great point. Great thoughts there. With soybeans, I know there's been a lot of chatter about China here in recent days. I know looking at their Dalian exchange, July beans hit a new low again. Chinese crush margins look like they're turning negative as well. You think about China and just some of their economic concerns. It feels like that's having an impact here, and maybe more so in the soy complex. What are your thoughts there, Bryan?
I think you hit the nail on the head, and that's why the market has been so weak. Now, we had a good update today, but when you look at the world's biggest importer of beans, and you kind of connect the dots of the last 12, 18 months, China has made no bones about the idea that they want to use less beans, and they want to, ration meal less in their hog rations. So you've got that one side of the coin. The other side of the coin is more production out of Brazil, a lot more production, a lot more export viability, and we're not selling beans either. So in the U.S., you've got kind of this problem where your biggest buyer in the world may be slowing usage and production, and then their economy isn't living up to what they hoped it would after this post-COVID PMI and all these data indicators just seem to indicate a less than thoughtful recovery so far. So lower demand, lower usage, more production. South America, gosh, it leaves our beans hanging in the lurch, and they've really felt the pressure of that here lately. Ultimately, though, it comes down to weather. Northern hemisphere crops are so critical to the world. We talk about Brazil all the time, but it's still the northern hemisphere.
Yeah, a lot of things to consider, and I definitely think weather is going to be the big overarching theme here the next couple of weeks ahead. Wheat market, Bryan, any notes there that stand out to you as we look at Thursday's straight action? Obviously, good strength there along with corn and beans, but any thoughts on the wheat trade overall?
Yeah, so a couple of things. I'll mention this in wheat in context. So there's a lot of rain in China right now where they're trying to harvest wheat. So quality wheat may be less available in China, but that makes more feed quality wheat available. So another roadblock for corn. So you've got something to watch there. They've had some really, really heavy rains and some significant, the numbers I've heard, 20 million metric tons. Well, that's, roughly 80 million bushels. That's
Hmm.
or 800 million, excuse me. That is a lot of product. Um, so you'd think that maybe jumpstart the market here. The other thing is the corridor. Again, some issues with trying to keep that open. And if that doesn't, so wheat has looked about as lousy as it can look on a chart. Our winter wheat crop is terrible. The drought map is still showing Kansas burned up. You've got places like in the Panhandle where if they can get at the wheat, they've gotten more rain here lately to harvest it, but they'll likely put that in the wheatledge. So I think your supply stays, moderately to really critically tight worldwide in exporting countries. That market has been pounded to no end by funds. So I'd like to think the wheat market's kind of the sleeping giant right now. It might be wishful thinking, but I just don't think it has all the variables of a bear market at this point. The bear market's already behind it. I think it's stability. I think it's back and forth, and I think it's upturn in prices.
We are having a conversation here today with Bryan Doherty of Total Farm Marketing. Bryan, you mentioned this at the open, the screaming higher cattle market that we saw on the day Thursday. Finally seeing some cash activity creep into feedlot country. I just got to ask, I mean, around midday, that fat cattle market just shot higher on Thursday. Did I miss something? What did you see that contributed to that big upside move on the day?
Right. So take a bull markets, take a look at bear markets when you see big moves. And what happens, I think, in a marketplace, it gets, and these are my words, distorted. Now, what does that mean?
Mm-hmm.
So when a market goes up as quickly as cattle have, and the futures market has been discount to cash. We've talked about that for a long time. Which one's going to budge? And the cash market seems to have the strength underneath it. That's a supply side scenario because the supply of cattle is limited. The big picture perspective that you look at in the cattle complex, though, is not only the supply side, but the technical indicators. When you start pushing prices upward like this, you get traders who or hedgers who get tired of getting beat up, being short, and you just get less and less people willing to step in front of that freight train. And then the people making money, in this case, those who said, we think cattle are going higher, they bought them 2 months ago, a month ago, a week ago, they're making good money. So you get more buying there. So again, you get the unintended buys, which are buy stops being triggered out. You get more buying from those who are making money, and you get hedgers that just say, I've had enough trying to hedge this thing, or traders trying to sell it. So you get these accelerations, and I call that this distortion. The only problem with thinking this is too distorted is the cash market is still ahead of the futures market. So this is just the delayed futures market. We talked about this before. Why in the world the June contract was such a discount to the April contract? And we said, well, that's because it's measuring the expected price of cattle in June, not today's price. Well, today's price is high. So yeah, June futures need to catch up. August futures need to catch up.
Good thoughts for sure. Hogs outside of spot June couldn't follow through in the last couple of days of sharp moves, but wonder if maybe that was just a bit of a correction from the big moves that we saw to begin the week, Bryan.
Yeah, it looked like there may have been some buy cattle, sell hog spreading. I don't know why still the hog market has such a difficult time trying to move upward, but it did have two big banner days. Kind of took a breather today, and it wasn't, nearly as sharp to the downside as some of the gains yesterday. Well, the gains yesterday, and in particular the day before. So the word on the street is they're starting to really see the pain points hit in that marketplace. You're seeing the sows being pushed into the slaughter pipeline more aggressively, and that's all challenging. It's all challenging to a hog market when you're liquidating. But this starts to really create the environment for a big recovery in hog prices.
Bryan, how about that dairy trade? Any notes there? I did see some green on the screen Thursday.
Well, green is good, but it's been pretty sparse in not only most days, most weeks. So, so we did see some pretty good recovery in the front months, but not the back months. The front months have been kind of beat to no end. And you've got a cheese market that hit its lowest level since the pandemic. So kind of think about that. So why is that? Is the consumer just backing away? Is it the recession, consumer dollars? Is it just that there's more supply? It's probably a combination of all of that. But today might be the first, in at least in the recent weeks, where we're maybe seeing some sign of cash activity picking up, and the front months finding some strength. But the back months didn't move, and they're still holding too much premium to the front months. So, unfortunately, we haven't seen, to my liking, the indicators yet. Way oversold, yes, but is it jumping nearby with both hands? We haven't seen those indicators.
Bryan, great thoughts as always. Before we wrap it up, anything else you want to mention or reiterate for folks here on today's show?
Well, I thought about, you'd asked that question. I want to jump back to the corn market because I think that's such a, it's just a big market.
Yeah.
and so when we kind of think about what I said earlier, that if corn prices, move up to maybe some target points. So you've got this really nice inverted head and shoulders formation, and some of your audience and some professionals will look at that and say, you're looking at lines in a chart, you're a grown man, and you're trying to predict prices. That's ridiculous. Well, maybe it is. But if you see it, and I see it, and a lot of people see it, a lot of times it becomes sort of self-fulfilling. So the charts do point, if we break the 535 area, they'd point to higher. And you've got this, what we call inverted head and shoulders formation. So what happens is when the market makes that move, if it does happen, a lot of it goes back to that short covering. So the point I'm going to make here is real brief, that you get a big push higher, farmers back away from the idea of selling what they would have sold for 2 months if they could only get a price. So my bias is to think about strategy, think about getting some call options in place now, and if the market gets to that level, sell unabated, and you have it covered.
Great thoughts. Bryan, if folks need some advice, I know they can reach out to you and the folks there at Total Farm Marketing very easily. How can they get in touch with you?
I'd ask them to give us a call, 800-334-9779. Critical time of year, so we'd love to field your questions if you got them. And you can email me too, Bryan with a Y, so Bryan at totalfarmmarketing.com. There's 2 M's in there, Total Farm Marketing. Or check out our website. But I think phone call and email be primary first.
Fantastic. Bryan Doherty with Total Farm Marketing. Always great to talk with you, sir. Have a great weekend, and we'll talk to you next week.
Yes, sir. Thank you, Jesse. You as well. Appreciate it.
Thank you very much. That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.